Hey, I thought it would be fun to take all the crazy stuff that's happening in the market right now, the economy, the real estate market, the stock market, Bitcoin, all those things, and give you an update on what's happening inside of my company real time right now, Blackjack Real Estate. The calls that we're getting, the seller motivation, how we're selling our properties, all of that stuff to tell you what we're seeing right now. So hopefully it helps you in your business. What's going on? My name is Bill Allen. I'm a military pilot turned full-time real estate investor. I flipped and wholesaled over 800 houses the past few years, and we're actively doing this right now. I want to give you updates for the market and help you think for yourself in your decisions where you're going to go in the future and what you're going to do inside your business right now so you can provide for your family the best that you can. So today what I want to talk about is I want to talk about the market status. So right now it is July 11th, 2022, and give you a quick kind of market update and what we're seeing. So right now, I feel like I've talked about this a lot. Consumer sentiment is the thing to point to, right? Consumer sentiment is starting to get to the point where it's starting to transition, right? Everybody's talked about the market collapsing and the real estate market going down. All these things. Let's talk about like real-time stuff, what we're seeing. And for me and my company, we send out marketing. This is not the time to slow your marketing. I've said it many times. It's not the time to slow your marketing. If anything, it's the time to kind of continue, be consistent, and potentially increase your marketing based on your KPIs, your key performance indicators. So what I'm seeing right now in a lot, and again, real estate is hyper local. So I'm actually going to do some videos coming up that you should check out in other cities. So I'm going to look at Nashville, I'm going to look at LA, San Diego, these kind of areas, maybe Florida, Atlanta, places like that, where you can see the market. We're going to look at actual charts and data. Today, I'm going to talk big picture consumer sentiment. Right now, I feel like it's cooling a little bit, right? Consumers are starting to worry. The media is working. The media is working. They're talking to the consumers and they're going, oh crap, I better put my house on the market. I better sell it fast. I better capture the top of the market. And so what we're seeing is we're seeing more houses come on the market. It's expected, right? And on top of that, what we're seeing is we're seeing the consumers start to feel like something might change. So we're seeing price drops. We're seeing slightly longer times on the market right now, in some areas more, and in some areas the same and potentially less. But we're seeing inventory go up a little bit, and as we watch that, we will see it, but it is still very much a seller's market, I'm gonna tell you that. Now, sellers might not be seeing prices rise 10% every few months and things like that like they've seen in the past. However, inventory is still lower than it was before in most places, and the prices are up, right? 2019 was an awesome year. We are well above 2019 right now. Now, is it different than it was 2 or 3 months ago? Maybe, and that's kind of the feel that's happening, right? But all we care about as investors is we care about the sellers. What do the sellers feel and think? And so I'm going to give you a couple data points. I'm going to read an email that my partner and I in Blackjack, Adam and myself, were emailing back and forth. And this is what he said. We're seeing an increase in calls and online leads that I would classify as having a herd motivation. So a herd motivation. So people are all seeing this and they're going, oh, hey, we're all going to go in this direction, which is really cool. The other thing that a lot of people aren't talking about is when you were complaining about the iBuyers and like Zillow and OfferPad and Open Door and all these companies taking a bunch of market share in the past and spending a bunch of money. Well, they're spending a bunch of money on marketing. And what they were doing is they were marketing to our future customer. So they're marketing to our future customer saying, hey, you know what? It's okay to get a cash offer. It's okay to sell your house for cash. And now is the time to take that payoff. It's been challenging to find deals in the past because sellers just want a ton of money. They're going to work with realtors, put it on the market, sell it for whatever they want. Now, as that shifts and changes, this is good for us as investors. This is a positive. This is not the time to jump out. It's the time to jump in. And if you're on the sidelines or have been on the sidelines for a while, not getting into real estate because you think it's too hot or too expensive or overpriced, or it's too hard to find deals. Don't be the person right now that is saying, I'm not going to get in real estate because the market may be turning and going down. Like now is the time to get into real estate. Everybody else wants to run away, you run towards it, okay? Herd motivation. They're concerned with the market, but don't have a deep enough reason to sell. I love this. Concerned about the market, I might accept a few price drops, but I might not be incredibly motivated just yet. However, the phones are ringing more, people are interested, they're calling us. So what should we do as investors? What I think we should do is follow up. Your follow-up game needs to be on point right now, okay? Your database is going to start filling up with leads again. So before we were getting less calls, now we're getting more calls, right? And so we need to be able to field those calls and we need to be able to follow up with those calls. That's really, really important when it comes to a business like we have, is doing that follow-up game. The riches are in the follow-up. I'm telling you right now, there's a ton of money inside your database right now by following up. So they don't have a deep enough reason to sell yet. They might if we continue to follow up with them, right? So he gave me a couple examples. We had a property in Franklin, Tennessee, where the seller was just needed to sell, wanted to sell quickly, didn't want to wait, didn't want to keep dropping the price, so called us and said, hey, if you know any, I'm not ready to sell like for $100,000 off. However, I'll take a bigger discount if you can move quickly. We have another one here that he's talking about in detail, where it's a as-is value. They're willing to take less to just move it quickly. So what he says is, based on the fact that we're getting an increase in leads but a lack of motivated sellers, I'd argue we're in the middle of a changing seller sentiment. Exactly what I've been talking about. How is the consumer sentiment going on the sellers and the buyers? If you're a wholesaler, you need to worry about the sellers, and your buyers, which are landlords, short-term rental owners, other flippers, maybe land developers, people like that. Those are your buyers. If you are a flipper, it's the sellers and it's the buyers, like retail buyers. How are the retail buyers feeling? What are they wanting? What do you have to adjust for that? So here are some actual numbers for us for calls, and I think this is going to be really important today. Remember, this is July 11th that I'm recording this. So January, we got 235 calls, and the assumption here is that we have pretty typical standard marketing, okay? So we're putting out about the same number of mailers and everything like that, so the marketing's staying consistent. So this is all data points for calls. So 235 calls in January, down to 225 calls in February, down to 184 calls in March, down to 169 calls in April. So this is the time it's going down and we're going, oh my gosh, like we need more leads, we need more leads, we need more leads. What's happening? And then in May, 293 calls. So from April 169 to 293 calls. So that's like it's like an 80% increase in calls that we got. And then in June, boom, 387 calls in June. And now this is just like a little bit of a change and shift in seller motivation, right? Phones are ringing more. And now I cannot wait to see the data in July. I bet we're in the 400 or 500 range. So we're almost tripling since April. And so what's that going to do? We are going to get a bit overwhelmed. We might have to plus up our team a little bit, right? And add another person who can answer the phones, add somebody to do follow-up. What are most investors going to do? They're going to say, uh-oh, I got to add more people to my team, more payroll, these kind of things. I don't know if that feels good. I don't know if I like it. I might be like just making a little bit of money. Then now I have to invest into my business, into the infrastructure, into the team. I'm not going to do that. And so now the opportunity is there for us to strike at a bigger volume. So if you're a bigger player and you can start bringing on some team members, start plussing up and making sure that you have a nice core team and you can hit that follow-up game, there's a lot of money there because our acquisitions costs are going to go down. This is what we're seeing. We're seeing the increased call volume. However, that increased call volume doesn't equal like massively motivated sellers. There's just starting to be this turn where they're starting to call to ask for more information, to see what's going on. It's not that our deal flow is going up just yet, but it will. If you stick with it and stay with the game, it will, I promise you that. So here's what we talked about our buyers. Pensacola buyers, we do deals in Pensacola, starting to pull back a little bit. Not interested in larger projects and certain zip codes, so they're being a little bit more picky. This is expected. Buyers might start adjusting their ARVs because remember, these are flippers or landlords. So they're starting to adjust what they think the value of the homes are and the demand for those are going to be. So as interest rates rise, most flippers are saying, hey, I'm not sure if I'm going to be able to sell my house for as much. I can't price in appreciation like you should never do, but they have been doing, right? All of these things that are going on, they are starting to say, hey, I want a little bit of better pricing. And so he said, overall, we don't get as much interest in the emails that we send out as we used to, and we have to call buyers for most of our deals. So we're actually calling them, texting them, engaging them, right? Saying, did you see this? So really starting to work. You have to work on the disposition side. So it's just like a flip-flop of what was happening. Before, we were able to, it would be very hard to get a deal, very hard to get the phone to ring, but we could send out an email or a text message and sell our house for more money than we're asking for really quickly. Now it's the flip-flop of that. Phones are ringing more, might be able to get more contracts, but it might be a little bit more difficult to move the property. So this is the dichotomy, the shift that happens, right? He talked about the hedge funds a little bit. Him and I talked about that. He said they're being a little bit more conservative. They were buying like 90% of ARV. Now they're being a little bit more conservative with their purchase prices. He also sent me a video. He's looking for a personal house in Tampa, and he said nearly every house on that market in that area has been a price decrease. So, and he also said he's personally talked to 25 leads in the last 2 days, personally. And so we have people that answer the phones, but he himself was on the phone with 25 leads in the last 2 days. So that is kind of our update, what's going on, what I'm feeling is happening right now on this day. And this video will probably come out a few days after this, but I think that's the direction that we're going, and it's very interesting. I'm going to keep these coming to you guys. If you guys love this stuff, put something in the comments. If you have a question, I'd love to answer it. And if you haven't already, subscribe to the channel. I would love to have you. I'm doing all kinds of different market updates coming up, and you're really going to need to know. This is a time where you need to be plugged in to know what's happening in the market right now. See you on the next one.